Morning traders. Hope you had a great week. This is Greg from Trade90X. Today is the 10th. We're on Saturday. And again, always look forward to our Trade90X Get Trade Fit in 90 Days weekend breakdowns. I hope you had a profitable week. I hope you watched our um, breakdown videos, post videos. And really, again, if you have any issues, remember, today's only the 10th February. You still have time to make changes. So if anything you need, you just hit us up at hello@trade90x.com. We're here every day, every weekend. We're here to help. Now, listen, the bottom line is whether it's our daily, weekly plans, it's the same rinse and repeat process. Our goal, whether it's the weekend, it's the pre-market, is our goal is to, get prepared, learn, and, we want to extract consistent income from the markets. That's the only thing I care about when I come in. And then I want to be able to be prepared to do that. So our goal here at Trade90X is to help support you extract consistent income from the markets. Okay, we got to help us prepare. Again, my routine, and hopefully you'll follow, is I find this very productive, is every morning I'm up between 5 and 6, cold shower, do some exercise and meditation, drink a lot of water, do some quick exercise, and get my mind right every morning. Okay, it's again, for me, I'm going to battle every day. That's the way I look at it. For a few hours a day, I'm going to battle every day, and my mind's got to be right. And if your mind's not going to be right, then just don't trade. Okay, this is how you want to prepare as a professional. You want to build that skill for life. These are the steps that I take every day. Now, again, we have our routines that we follow every day. Pre-market, it's usually between 7 and 8 a.m. New York time. We're building our plan. Live market, we like to typically trade between 8 and 12. I mean, you might have a few other, listen, hourly might look at the afternoon, but again, typically between 8 and 12 New York time, we find have the most productive movement, volatility. And then post market is when we finish. We, journal and review, and then I'll add here. And then also, like today, we're doing our weekly, and then we'll do our monthly, again, reviews. All right. So again, it's building that process. It's about process. It's about consistency. It's about building that plan every single day. Okay. Now, in order to succeed, I can only tell it from our experience when you're part of Trade90X, is you got to have a process that's simple. Okay, less is more, replicable, repeatable, that gives you consistent edge. And at Trade90X, we call this the Earn the Right to Trade Live process. And what that includes, and again, I talk about this every day. Why? Because this is part of what it takes to be successful. I'm not just here to, talk. I'm giving you $1 million stuff here. Again, it's about education, back testing to prove consistency, and then this is important, having that support, not just leaving you alone with the information, but having support and accountability. I knew, even like when I started, getting that support was difficult. Everybody wanted to sell you something, or here it is, and then figure it out yourself. To me, if you don't really have a group or a person that you can really talk to that's been there, done that, it's difficult to have success, or you might figure it out, but it's going to take you a lot longer. So for me, I'm always a business person that looks at how can I find people that have been there, done that, and shorten my learning curve. And I hope you're the same. So again, as I mentioned, all I care about every day when I come in is filter out that noise, follow my plan that has an edge, focus on the steps that are going to help us extract consistent income. Okay. And I focus on those steps every single day, and you should be doing the same. Okay. The problem I see with a lot of newer traders, they watch, a bunch of different videos, they start pushing buttons, something doesn't work, they go from one thing to another. That's not how you build a successful business. And I'm somebody that's been doing, building businesses, running them for 25 years. So I understand a thing or two about process, strategy, risk management. Okay, these are the things that really you need to be a successful trader. Now, there's things that I talk about right here. This one page right here, this is our plan every day. It is not more than that. If you have a plan that's going on for pages and pages, it's too complex. This should be your plan right here. Okay. And again, what do we focus on every day? I don't care if you trade a 1 minute chart, 5 minute chart, 15, weekly, monthly. I don't care if you trade penny stocks, Apple, futures, Forex. It doesn't matter. ETFs, it does not matter to me. I'm going to ask the same questions and do the same process regardless. And what that process is, which I talk about every morning. Number one, it's about building that proven plan that's, gives us consistency. I need to know my numbers. Now, when I say know my numbers, a lot of people say that, but this is what it means to us here at Trade90X. When I talk about active trading, swing, day, or scalp, we don't risk more than 0.5% up to 2% of our capital per trade. I don't risk more than 3 to 5% of my capital of my account in any one session. I focus on trades that have at least space and give me a minimum of 2 to 1 to target one, and I have defined profit and loss goals every day within that 3 to 5%. Now, why do I bring this up every day? Listen, I'm going to be honest, from somebody who's been successful doing business, you don't know your numbers, you are not going to succeed at any business, and you'll never have a plan to scale up. Okay, so the faster you learn that, the faster the probability is you're going to have a successful trading, whatever type of trading you like. Okay. Now, again, also when I bring up numbers, you're going to have to learn that drawdowns and losses and drawdowns are inevitable in trading. It's in any business, it happens. So if you don't have a plan that allows you to understand that, you're going to fail. And I see way too many people, especially on YouTube. I look at all these guys, risking 5, 10, 15, 20+% of trade. Well, that's great, but they evidently hadn't traded real money for any period of time, because if they have, they wouldn't be doing that. Because I can tell you right now from experience, I don't care how good of a trader you become, anybody can lose 5+ trades in a row. And if you lose those 5+ trades in a row and you're using 5, 10, 15, 20%, well, do the math. And all I can tell you is that most people that blow up their accounts don't come back from it. So that's why we're such sticklers about our process, because our goal is to quickly take you from that learning phase to learning how to extract consistent income. But unless you have a strategy that's proven consistency on how to do that, understand proper risk management with the right information to look for, you're never going to have a success. And that's the problem with most people in business and trading. They unfortunately, they just never figure out the things that you need to focus on. So here are the things that I look at. So quickly, when we come in every morning, I'm going to show you some quick data points that I look at. Again, my goal every day is these points right here. And hopefully you'll be listening. So all I care, whether I trade a 1 minute, 15-minute, weekly, monthly, penny stocks, Apple, futures, Forex, it doesn't matter to me. All I care about is, what is that market context? Larger time frame versus shorter time frame. That's all I care about. Who has control? Is it the bulls, bears, or range price action? Okay. Is it obvious that bull, bear, and range? The more obvious it is, the easier it is for us to make money. And do you know what a bullish, bearish range context look like? Whether it's a 1 minute, 15-minute, or weekly or monthly. And do you know what an A setup, I mean a high probability setup, looks like within a bullish, bearish, and range market? And finally, do you know when to sit on hands in a choppy, no edge price action order flow? Yes or no? That's all I care about. Okay. So and again, I show you every morning, every weekend on what that means. But again, here are the symbols that we trade over and over. Again, I recommend, you'll see if you're part of the Trade90X process, you start with 1 or 2 symbols. That's it. Okay. You don't look all over the place, and you trade those symbols over and over. Then once you've proven consistency, again, I like to trade these symbols because they make up the pulse of the market. Okay, they're the most liquid, and I can trade these either with futures, options, or I can just buy the ETF or stock. That's it. And again, if you're part of the Trade90X Earn the Right to Trade Live process, you'll figure out in our plan, because one of the things that we do is we figure out for you, and I'm actually going to put that in. You need to understand here. This is important. You need to understand what type of trading suits your personality, time, and resources. And what I mean by that is, number one, you may have a job. So day trading or scalping is not going to work for you if you have a full-time job. Okay. You're probably going to be best off starting with swing trading. You may not have the personality to handle day or scalp trading, because it's fast. You got to be able to make fast decisions. You might feel more comfortable taking slower pace, swing trade. And there's nothing wrong with that. Again, or you might be somebody like myself. I can do all three. I can do position trading for my retirement. I can look at swing trades, or I can take active day trades. But again, you'll find out, and again, that's why it's very important. It's not one size fits all. And stop worrying also about other people. This is your journey. We're going to help you get to your journey, and stop worrying about what other people are making. Too many people get caught up. Oh, this. No, worry about yourself. All right, so these are the things. Again, all I care about is, how do I test my process for consistency? Do I have strict risk and money management? And do I know the data? These are the things I look at. That's it. Here are the symbols that I'm trading. Now, also, I talk about monitors, and I'll do another video on each one of these specifically. But again, you know what? And I was somebody also, I'm not going to lie, when I used to, when I was first going, oh, I had to have 4 or 5 screens. Let me tell you something. The more screens you have, the less likely you're going to make money. And why? Because when you're looking all over the place, remember, you've got to focus in. So 2 or 3 screens are fine. I happen to like 3 screens. I want to have one screen just with my brokerage and kind of news information, and then the other 2 screens right in front of me. Those are the ones that I have the symbols I'm going to be trading, or whatever odds enhancers. That's it. But listen, 2 screens are fine as well. You have one with your brokerage or news, and then the other just for charting, and that's fine. The only thing I will recommend is make sure you have fast internet, a good computer, and again, when you are trading, make sure you're in a comfortable, quiet environment. Okay, you need to focus. Just a few hours a day. That's all it takes. But when you're trading, you need undivided attention. You can't have, stress, family issues, anything that's sick, anything that's going to throw you off your game. Don't trade that day. Okay. And take it from experience. Now, before we get started, please, I always talk about, and the reason I talk about these things, these are the things that work. Okay. These are real things. This is not some, bullshit stuff here. This is the stuff that, really. So right here, I always say, hey, talk to your financial advisor, accountant about risking capital, and then always have 6 to 12 months emergency funds before risking any capital. Now, again, this is kind of our game plan every day. Nothing changes. Hit us up at hello@trade90x.com. If you don't understand it, I'm going to show it to you. I show it to you every morning. I show it to you every weekend. But again, I understand, listen, you may have questions, and we're here to help. Now, one other thing also, when you do sign in at hello@trade90x.com, we always have a lot of free stuff you'll get, things that are important, things like a free journal, free checklist. Also, if you go to our Trade90X Instagram page profile, you can go sign up for a free 15-minute call and ask us anything about trading. So again, we give tons of value. Our goal is to help you extract consistent income. That's our only goal. Let's go get it. Let's go see what the week brought, and let's go see what we've got coming into Super Bowl Sunday. And by the way, unfortunately, I'm a Jets fan. But if I had to pick somebody, flip a coin, I'm probably going to look at probably say Kansas City, but we'll see. With that said, let's go get it, and let's go see what we got here. All right, so I'm going to save that. So the first thing I'm always going to do is I'm going to check out the calendar. On the weekends, I use Forex Factory. During the week, I use Econo Day. Again, only reason is, I don't know, for some reason on Saturday, Econo Day doesn't show up. But here we go. So again, when it comes to news and earnings, again, for me, these are the things that are potentially can be personality changes. So we don't trade the news and earnings. Our goal, as I said, every day, I have a process that's proven. I know my risk management. Is it the market context, bullish, bearish, or range? Do I know what the bullish, bearish range looks like then? And do I know what ace setups look like using my risk method? That's all I care about. Now with news and earnings, my hope is when we have important news and earnings that it moves price quickly to one of my ace setups within a bullish, bearish, or range markets. And if it's choppy, no edge price action, sit on hands. Again, trading, unfortunately, 50% of it is sitting on hands until you get an A setup. And if traders would learn to sit on hands and only focus in on what those A setups are within a bullish, bearish, and range market, it's amazing how much better the chances of probability of success would go up. All right, so here we go. Monday, you got another FOMC member. You got Tuesday, very important. Wednesday, not much, nothing going on. Thursday, Friday, so very busy week when it comes to news and earnings. So just be aware. I like to set an alarm clock whenever there's some key news or earnings. It just kind of alerts me. And that's something, actually, that's a good idea. Actually, I should do a video on alarm clock, basically the times, basically what times we do routines, what times that we look at. And so you get a pop-up, it's important. So I'm going to make a note of that. That'll be a good video, short video to do. All right, so good. We have news earnings right here. And everything I show you, by the way, is free. Okay, you don't need to spend money unless you want to. But again, these things I'm showing you all free. And again, all I care about is I want any type of edge that shows me who has control, the buyers, the sellers, or are we in a range, or I can't figure it out. Okay, so again, when it comes to news and earnings, again, if you're going to trade, if you have a stock here that's important, make sure you know that it's out if you own it. We don't trade into news and earnings, as I said, but what I'm looking for with stocks, I want to see if there are stocks coming out that have a chance to have a personality change, especially, the big ones like the Apples, here, like Coca-Cola, Shopify. These are important stocks right now. Airbnb, these are things, and again, you got a lot of good stocks here. These are things that make up, especially on the consumer side, Marriott, travel, anything that, especially consumer, because remember, the US is a consumer-based economy. So again, anything that can affect the overall consumer, things like that, those are things I'm going to be looking at. So just pay attention. Again, listen, this is not difficult. You just need to know the rules of engagement in business. And what I mean by that is, again, I'll say it till I'm blue in the face. You need to understand how the market works, what information can help give me an edge, and then how do I build that process and prove it out in back testing, okay? Using proper risk management. And then again, I'll say it again, understanding what a bullish, bearish, range market, and understanding the A setups in a bullish, bearish, range market. I don't care if you trade a 1 minute, 5 minute, 15, 60 minute, monthly, weekly. If you just focus in on the things that I'm talking and master that, you'll be ahead of 99% of the traders while they're wasting time looking at other stuff that makes, doesn't help them make money. You're going to be focusing on the things that help make money. All right. So now that we've got that, fear and greed index, this again is a sentiment tool. And again, it looks like the bulls going into the weekend still have control. Barchart.com, go to stocks, market momentum. And what I'm looking at here is how many stocks based on every stock in the 50 moving average. What is it telling me? Well, we can see that we were bullish. We started to get weak, but now we're starting to move back up. So we'll pay attention if we get that continued follow through. Again, these are just odds and hedges. The most important thing is when we get to the chart, but I just want to understand what's going on under the hood. All right, right here. FinViz, again, these are all my favorite tools. Again, what I'm looking at here is 1 month, 1 week, 1 day, because the most important thing for me is S&P, the indices, especially the S&P, which represents 75% of the market, and then looking at the monthly, weekly, daily. Not so much the daily, but again, what I'm looking for is, do I have confluence with the indices and the sectors? Because if I follow those, that's giving me an edge. That's where the money's is put into. So the more confluence I have here, the more that I feel comfortable taking a trade more than a day trade. So if these are all green, S&P's clear, then I can either day trades, scalp, day trade, or I can look for swing trades. If these are all red and the S&P's bearish, then I can be looking for all three. But if these are a lot of indecision, red, green, I'm not going to even think about swing trades. I'm going to be just focusing on my scalp and day trade. Why? I don't want to be in longer term trades when there's indecision. Are we clear? Good. So right now, bulls definitely still have the edge. All right, tradingstir.com. All right, so remember, I do this every day if you've been watching me. And Why do I look at this? Because what I'm looking at here every day, this basically is a really good odds enhancer. Now, remember, it only comes out once a week, Friday at 3:30. This company does a great job of doing this for free for us. And basically what I look at is all the key symbols, but I focus in on the S&P. And what I'm looking for is right here. What are the 85%, the banks, the institutions, not the retail investors, okay? And what it tells us is that 81% still on the S&P, the money that counts, the 85%, the smart money, the commitment to trader, the asset managers, institution banks, still have a bullish bias versus 18%. So why is this important? Now, this is not that day-to-day stuff, but why this is important is until I see a personality change, this is telling you, this is not some bull crap. This is order flow right here. So this is this kind of stuff that helps you understand what's going on in the market. All right. So right now, the long-term bias is still bullish until I see a personality change. Okay. All right. Stockcharts.com. One of, excuse me, guys, my clogged up this morning. All right. So again, stockcharts.com. If you've been watching me, you know it's one of my favorite tools. Why is this one of my favorite tools? Because number one, I can quickly, in one view, very quickly, look at the long-term versus short-term. I don't care what type of trader you are, scalper, day, swing. You need to know the longer term versus short-term. Again, I want to know the market context, long-term versus short-term, bull, bearish, or range, or is it no edge? That's all I care about. Okay. And what I look at is I look at the Dow, S&P, NASDAQ, FTSE 5000. I look at the Russell, the New York Stock Exchange. Okay. And these are key symbols that make up the market. I look at Apple, I look at gold, oil, and then I use my odds enhancers, especially the VIX, the volatility sentiment tool, the 10-year bond and dollar. Now, if the VIX, along with the 10-year and dollar, are moving up with clarity, then that is bearish for markets. If these three are all moving down with clarity, that's bullish. Now the VIX is sideways right now and kind of sitting at the bottom, and it could do that for months. So we'll keep an eye on that. But what I care about is, remember I told you, all I care about is, do I understand what a bullish, bearish, range market looks like? A bullish and bearish market looks like lower left to upper right, upper left to lower right. How we make money in a bullish bearish market, what the A setups are, is I'm looking for those clear, obvious momentum legs into pause and pullbacks. Those pause and pullbacks is where we make money in a bullish or bearish market. And if it's not obvious, I do not trade it. Are we clear? Now, in a ranges, I'm looking for bottom, middle, top. I break it into thirds. I don't care if it's a 1 minute. These work on the same thing, works on a 1 minute, 5 minute, 15, weekly, monthly. It doesn't matter. Ranges, bottom, third, middle, top. The middle is going to be always the most unpredictable. Low probability. The highest probability trades in a range are going to be your bottom and tops. But you have to understand what bullish price action rejection looks like at the bottom of a range to go long. Top third, you got to understand what bearish price action looks like to go short. And we play the range until it can prove back to a bullish or bearish momentum. That's it. Keep it simple. So right now, if you're looking at the indices like I am, they're moving lower left, upper right. Lower left, upper right, lower left, upper right, lower left, upper right. The VIX is kind of sideways. It's not really doing anything. So as long as we stay there, we're definitely bullish. The only one that worries me a minute is this Russell right here. Now, it is moving lower left to upper right, and it's kind of, but it hasn't broken out yet. So we'll have to keep an eye on that. But that's the long term. Again, it's either a yes or no question. Okay. This is why I like focusing on things that matter. Now, remember what I told you. Now we're going to the short term. Dow, S&P, NASDAQ, FTSE 1000, and NYA, Russell. Okay, so the VIX right now is kind of still sideways. All right, we'll have to keep an eye on that because the 10-year and the dollar are kind of, are definitely rising. So we'll have to keep an eye on that. But tell me right here, what are they doing? They're moving lower left, upper right. That's bullish. What did I say? We're looking for those momentum legs into pause and pullbacks. Now, the pause and pullbacks you'll learn when you're part of, and you'll see me do it in the chart, you'll see that they're either small, medium, or large pullbacks. Okay. And you have to learn what those are. And I go through that every day and every weekend. But again, this is part of our process. All I care about, what is the long term versus short term on the symbols that make up the pulse of the market. And then I can go and trade other symbols. So one of the other things that we can look at is here. Let me show you quickly. Is I'll look at the ETFs right here. Remember, I start with the S&P, lower left, upper right. So if this S&P is bullish and you somebody that wants to trade ETF or stocks in the ETF, what do you think the most obvious thing is? I'm going to focus on this on a ETF or the symbols in that ETF that are following the S&P. Is it XLY? Nope. XLC, definitely. Now, XLK, definitely. XLI. And why do I like XLK and XLY? Because they're breaking above the highs. So XLC looks okay, but my favorite right now are XLK, XLI, XLB, no, XLE, no, XLF is starting to come on, and XLV. So those are the sectors that you focus on. Again, stop listening to other people. All you have to do is learn what we show you, and this will put the odds in your favor. So now I like to look at the S&P, Dow, and NASDAQ, of course, but S&P right there. And then a quick one right here. If somebody you trade stocks, again, I'm showing you $1 million stuff. People don't know this stuff. Here, you want to trade stocks? Go to the Dow right here. Here's the Dow 30, some of the top stocks right here. And I don't care what anybody tells you. If the S&P, the Dow, the NASDAQ are looking strong and they're bullish, which one of these symbols should you be trading? Apple? Not right now. Chevron? No. Now, I don't like gaps, but Merck looks good. Lower left, upper right. You see this? This is what I'm looking for. If I'm bullish or bearish, I'm looking for lower left, upper right, momentum into pause and pullback. And where is the most obvious? AXP, Merck. What about Dow? No. Intel? No. Microsoft? Definitely. This one, nope. You see how fast I can go through this once you learn what to look for? JP Morgan looks pretty good. I don't like gappy stocks. No. CRM looks good. What else looks good? Walmart. That's it. So there you go. That's how quickly you can literally look and find stock. But first thing I'm always going to do is, like I said, we go through this. Hold on a second. I don't know why, because I want to go back to this every time. See, this is what happens when you have a free version. It won't hold, the symbols. I got to do them hold on a second right here. But I love this because, again, like I said, I can quickly look at the long term versus short term. And these are the symbols. Not only do we trade the indices, Apple, oil, gold, right here. So it gives me not only the symbols I want to trade, but I can quickly understand, again, what is the long term? What is the short term? All I care about is, are we bullish, bearish, or range long term? Are we bullish, bearish, or range short term? And do I understand what the A setups are in a bullish, bearish, or range? Or is it choppy, no edge price action? Okay, then I showed you quickly looking at the sectors, starting with the S&P, are we bullish, bearish, and range? And the more obvious it is, it's the way to make money. So I'm going to do another video on watch list edge. This is how we do it. This is how simple I do it. I can quickly determine, are we bullish, bearish, and a range? And if we're just in a range, then if I don't trade a range, I do nothing. Okay. If I only trade bullish and bearish momentum, then that's what I need to look for. So if the S&P, NASDAQ, and Dow are moving lower left, upper right, I showed you quickly, go to the sectors. Okay. Boom. Look at the sectors that are trading in line with the, and then you can go and look at a quick list like the Dow stocks, or if you have some other stocks, fine. But this is here, 2-3 clicks right here. You quickly tell, are we bullish, bearish, or range, and then which ones I should be looking at. That's it. That's all it takes. All right. Now, one other thing that I like to look at before we get to the chart, right here. So basically, this is the same thing I showed you, how many stocks are above 50, but I built a chart, and this is S&P, NASDAQ, Dow, got the US dollar, VIX, and then I've got how many stocks are above and below their 50, but I also added how many stocks are above and below their 220. So what am I looking for? So bottom line is, the most important thing is, these are just odds enhancers. But if you don't have a setup in the chart, nothing matters. But what I'm looking for is, number one, what is the VIX and the dollar telling us? Well, as long as the VIX is staying, the VIX is my most important odds enhancer, long-term, short-term. As long as this is just is moving down, it's staying quiet, then that could be good for the bullish market. Then I look here, I start with the 50. So again, let me show you how I use it. So basically this goes back 20 years. So that's got a pretty good historical. So anytime that every stock in the market is between say 3 and 25%, there's been a good high probability of going from bearish to bullish. Okay. And same thing here over the last 20 years, when we're up in the 70s, 90s, high probability of going from bullish to bearish. So how I use it is, for me, is when we have, especially when I have all three of these near extremes, it allows me, so if I'm going up top and we're rising, what I'll do if I'm in a longer swing trade, what I'm going to do is I'm going to take some profit, maybe leave a little bit of a runner. If we're going all the way down here, I'm shorting and I see this, then I'm probably going to take a big piece of profit, maybe have a runner, or I may take something off. But when we get to the extremes, then I go look at the, S&P, NASDAQ and Dow, and I look at it, okay, do we have setups when we get to the extremes? That's it. That's all I look for. It's just an odds enhancer, but it makes me pay attention when we get to these extremes. And when I have all three moving averages at the extremes, it just says, all right, pay attention. That's all it means. And this view right here gives me a snapshot of what's going on. And I can see with the VIX going down, it's no wonder the indices are moving from lower left to upper right. Remember, all I care about is bullish lower left to upper right, bearish upper left to lower right, range, equal highs, equal lows. Okay, that's all I care about. And do I know what an A setup is in a bullish, bearish, or range? Okay, that's all I'm looking for, and that's all you should be looking for. And as long as it's proven, you've back tested, proven that it's consistent with the right risk and money management, again, you're ahead of 99% of the traders because you're filtering out the noise quickly and you know what to look for. All right, so now that we've identified the short-term, long-term as more of a bull bias, now I'm going to go look at the charts. Now, when I'm doing my top-down, I like having this chart view on any symbol. And so my monthly and yearly chart, that's going to be my main trend. Anywhere from a 15-minute weekly is my intermediate trend. And again, we know right here from the commitment to trader, I work off facts, not fiction. Okay, I want to see what's going on under the hood on the order flow, and then understanding the chart. So again, we know that the main trend, again, if it's bullish, then the intermediary trends, those pullbacks are going to be in favor. If the long-term trend is bearish, then we're looking for pullbacks to short. All right. So let's go right here, monthly. All I care about is, what is the main trend telling us? Is it bullish, bearish, or range, or is it untradeable? Well, remember, bullish is lower left to upper right. Bearish is upper left to lower right. Ranges equal highs, equal lows. So what are we doing right now since 2009? I think you'll agree. We're moving lower left to upper right. Even here during the pandemic, all we did was have a sideways price action and rejection. 2 years up, 1 year down, 6 months sideways. Now we're retesting the highs. Now, what are these lines right here? I call these decision points that I get usually from the monthly and weekly chart. And these, all I care about is where has price paused and left quickly. And I call these decision points. And when price gets there, I don't want to trade into them. I want to see how price reacts. All right. And then I bring it down. I don't care if this chart was Apple. I don't care if it was a penny stock. This is how I do the top-down approach. So right now we're bullish, but we're coming into on the S&P. We're right up against those highs. So we need to see, are we going to now break out, break and retest and go for another leg, or are we going to reject? Well, we don't know yet. So look right here. Here's your weekly chart. What is it telling us? We're moving lower left, upper right. So you see right here, again, I have those decision points on, and this was the last trade. Remember, I don't care if I'm trading a 1 minute or weekly. If I'm bullish, I'm looking lower left, upper right, momentum into pause or pullback. If I get my entry candle, now my entry candles for bullish are going to be engulfing pin bar candles. You got double or double dojis, and my rejection right here for bearish shooting star, engulfings, double dojis. That's it. That's how simple I keep it. Okay, so now let's go to the daily. Are we bullish, bearish, or range? I hope you said bullish. We're moving lower left, up right. You see the red lines? Those come from my monthly and weekly. This is why I do my top-down approach. I want to know where on the monthly and weekly where those price paused and left quickly. All right. And if I want to do anything in the shorter time frame, I'll use the ray line, the smaller line, and make it blue. All right. So what is it telling you? Lower left, upper right. Momentum into pause or pullback. These were all the entries, potentials that took place based on just obvious, clear momentum and getting that candle. And one of the odds enhancer I have on here is I have the 10 moving average. The candle has to close above it. All right. And you'll learn all this in the Trade90X Earn the Right to Trade Live process. Okay. So I'm showing you the top down approach right here. And then again, I'll use a 1 hourly up to a daily to help with my swing trading. And again, and the 60-minute also, the chart will be used as our anchor chart for our scalp and day trading, which I'm going to show you because you guys in the community, and I show this every day, by the way, for the last year and a half, you guys came to me and said, listen, I love what you do, but is there a way to do it a little bit simpler using a one chart view, have a set of tools that are predictive, not lagging, have clear defined setups for bullish, bearish, or range, and then the actual steps so we can go in. And I've been literally showing you that strategy, that $1 million strategy every day, every weekend for the last year plus. So again, on the 60-minute, the tools that I add that are predictive, not lagging, see right here, this is where the week starts, this thick black line, this is the yearly high low, the weekly is purple high low, the orange is the monthly high low, this dotted line is the previous day's close, and then I also use right here the previous day's high, midpoint, and here. And then also what I'm going to add is I want to see the daily open. So let me put that in. There we go. All right. So for me, when we're swing trading, I use these extra tools, but again, all I care about, are we bullish, bearish, in a range? And what I'm looking for is, again, momentum into pullback and pauses, momentum into pullback and pauses. And again, if we can get them off those decision points that we're using right here, these are the things that really give me the odds enhancers right here. There we go. So these are the areas just here in the last week. If you understand what we're looking for, bullish, bearish, or range, okay? What is the A setups within a bullish, bearish, or range? And then how to use our odds enhancers, okay? So we're bullish. We're moving lower, left, upper, right. So now let's go and start. I'm going to show you this real quickly. Again, what are the tools that are predictive, not lagging? What are the setups? And then what are the steps to go and back test this? And I'm going to show you, since it's the weekend, I appreciate you bearing with me because during the week, I only do the indices, but on the weekend, I'll do, about 10 symbols so you can get a better idea. This works on any asset class, doesn't matter. All right, so here are, I like to use, say, a 30-minute to a 60-minute as my anchor chart. Again, the tools are the same tools that we're going to be using off the 30-60-minute to potentially look for swing. And then also this will be our anchor chart to help us with the day and scalp. So again, we have the yearly high-low in black. We've got the monthly orange high-low. We've got the purple weekly high-low. I've got the previous day's close, this dotted line. I've got the open in dark blue here, and then I got the previous day's range, high, low, midpoint. So how we use these all together is they can all be used as entry, stop, and targets. And by using these tools, it quickly tells me, are we bullish, bearish, or range? Because remember, that's all we care about. Are we bullish, bearish, or range? Okay, now, if we're above the previous day's high, these three lines, the previous day's high, midpoint, and low, are critical to us because they quickly tell us, are we bullish, bearish, or range? Now, if we're bullish, like we were here on Friday, because we're above the previous day's high, this is what we were looking for. If you were trading a 30-minute chart right here, this is what we're looking for. Higher high, higher low, momentum into pullback and pauses. Again, I use that 10 moving average as the short term. If they get the candle, especially if we have it off a key decision point, then we have a high probability trade. And it also tells us that we're bullish. And when we break above the previous day's high or below it, I'm always looking where those weekly, monthly, yearly, or those bigger decision points, those red lines are, because those are important. And no wonder yesterday we closed bullish, but we stopped right at that monthly, yearly. No surprise. But again, just looking at this on the 30-minute, it gave you a bullish trade. Now on Fridays, I only we only day and scalp. I don't want to go into the weekend holding new positions. So even though this was bullish and may last a few days, I'm going to be flat at the end of the day. But listen, you're going to be ahead of 99% of the traders. If you follow our Trade 90X, Earn the Right to Trade Live, that means that you've proven your strategy has consistency. You understand risk and money management. Okay. You understand the difference between a bullish market, bearish, and a range market. You know the setups within a bullish, bearish, or range market. So again, if we're bullish, we're looking for that, momentum into pullback and pauses. Okay. If we're below, we're looking for this. Lower high, lower low, momentum into pullback and pause, and we look left for our targets. Okay. If price was within a range right here, remember I talk about ranges, bottom, middle, top. Ranges, the trades that I want to take that are high probability, I want to see strong momentum. And if we're inside the range, I'm looking for top third, bottom thirds, fake out breakouts. If we're trading above or below the range, I want to see strong, obvious bullish or bearish momentum. Okay. So here are the trades that I'd be looking for. So if top third rejection down to the middle and bottom. Okay. And I want to see, again, like this, I want to see strong momentum rejection, bullish, then I'm going to the middle and top. Or I'm looking for, if we would have done this and then the fake out breakout, then I'm looking to fade. Same thing on the bottom. We get that strong momentum, but then we get that strong rejection, fake out breakout, I'm looking to go long. So that's it. If we're bullish, I'm looking for those clear momentum pullback and pauses. Bearish, below the range, I'm looking for those clear momentum pullback and pauses. If we're in a range, I'm looking for top third, bottom third, fake out breakouts that are obvious. But you see this right here? This is what we call no edge choppy price action. And this is telling you that the S&P on Thursday had no edge on this time frame, had no edge, and your job is to do nothing. And when you understand on how to identify what a bullish, bearish, or range market is, you are so far ahead of other people. And then when you understand what no edge price action is, to sit on hands, I mean, you're putting the probability in your favor. So, all right. So now that we understand this, what the tools are, what the setups are, now let me show you the steps for the Trade90X one chart view strategy. All right. So step number one, and this is going to work for any symbol. I'm going to show you. First thing I do is I go to the weekly. Okay, why do I go to the weekly in step number one? I want to see what the context is. Bullish, bearish, or range. We're moving lower left to upper right. Here, let me clean that up so you can see it. We're moving lower left to upper right. It's part of step number one. Where was the last areas most recently that price paused and left the station quickly? Well, it was right here and here. So these major decision points come from the monthly and weekly. I determine the main trend. Step number two is always the same. I'm going to look at a 30 to 60 minute. And there we go. What is price telling us over the last few weeks? It's moving lower left to upper right. Okay, great. Now what is it doing right now? Well, this week we were in a range. Monday and Tuesday we're in a range, and then we broke out. Okay, and like I said, just got to understand what price is telling you. So if you were trading this 30-minute, S&P was in a range right here. Okay, now if you understand range trades, then definitely this would have been a nice trade right here to fade back in. But the trade really that I like would have been this one right here. On Wednesday, we broke above the previous day's high. And then again, right here, the S&P. Thursday was nothing. And then what a beautiful right here trade it gave you. So again, understand what price is giving you. Okay, that's all you have to do is use our tools, and I show you every day. All right, so S&P, this is step number two. Those would have been, for me, the trades trading a 30-minute. Now, let's go down to a 1 or 3 minute. This is step number three if you're going to scalp and day trade. Now, remember, we always trade between 8 and 12. So I'll just put that right there. And again, tell me, and we did this yesterday. So remember what I talked about when overnight traders came in, they had no edge price action until this right here. We went from an inside day to an outside break and retest. So remember, ranges, top third, bottom third, fake out breakouts until price proves out. Once it broke out, it had bullish momentum, gave overnight traders this trade right here. We were doing our analysis when it was right here, and this is when we came in, and look at the trade right there. Now remember, we are more bullish because we're above. So what are the trades that I'd be looking for that I talked about? I talked about getting a rejection at the previous day's high. It would be a high probability trade. I talked about if we came back in and did the fake out breakout and did this, then we're looking for the fade trade down. Now, if we would have rejected up here, then that could have been a potential for a move down there, but we didn't. So now I can understand, there were definitely some people that might be looking at that rejection right there, and that's fine. I'm okay with it if you're a seasoned trader. But for me, I'm looking at the A trades. The A trades for me were going to be, well, and then also if we would have broken out here, if we would have, come here and, and done this. So that was a trade, the rejection, or with change of personality. And that for me really was, this one try, two try, just as good as it gets. And then, just beautiful. Your first target was back up here, hit. I mean, just a beautiful, beautiful trade. Again, once you understand, is it bullish, bearish, or range? And again, this gave you that bullish momentum trade because we were above the previous day's range high. All right. So let's go now to NASDAQ. All right, step number one. I'm going to keep doing this on a bunch of symbols until you get it. And if you have any questions, you hit us up. I want to rinse and repeat this until it really sticks in your head. And again, I've been doing this for the last year and a half. So again, it's the same thing every single day. I come in on the weekly. What are we doing? We're moving lower left, upper right. The main context is bullish. Where are the areas most recently where price paused? Okay, and we can see left, but now we're starting to break out. And this last area was the last main pause right there. So I put those on. Now let's go to the 30-minute chart. And step number two, it's always the same. Squeeze the chart up. What has it been doing over the last few weeks? It's moving lower left to upper right. And then we zoom in right here. And I can see right there, price is broken out right here. And during the week, same thing as the S&P. For me, these would have been potential trades right there. And then we went sideways and right there. Those were nice trades right here. Really nice trades. If you were trading this 30-minute chart. Now let's go down to that one to earth. I'll go to 3-minute, put in 8 o'clock. There we go. So we came in yesterday. We talked about it. Again, same thing as the S&P right here. You had no edge price action, and then the overnight traders finally got a break and retest from an inside to an outside day. And then look at that. We got another rejection right here. You waited until we got the break and retest. And there was your beautiful trade right there. I'm going to put a line right here because that was the last rejection. And first target was up here. And then once we broke, then we had our next target all the way up. It's amazing how these levels just go level to level. Or, like I said, once you break out, we can actually measure the move as well. But again, I just use levels. Again, I tell you, these tools are amazing. Again, it's either we're bullish above the previous day's range high, bearish below the previous day's high, range low, or we arrange. And again, the range, I want these setups to be obvious, top third, bottom third, fake out breakouts. I have no interest in choppy price action. You're just going to lose your money. So again, NASDAQ closed very bullish. Let's go to the Dow, same thing. Rinse and repeat. Let's go to the weekly chart. Again, I do these from one chart. Again, main trend, it's bullish. Lower left, upper right. Where was priced the last where it paused. So I'm going to just put here and here. All right, let's go to the 30-minute chart. What was price doing over the last few weeks or months? It was bullish, lower left, upper right. Zoom in, what was going on over this last kind of week. And you can see that we had some nice potential trades right here. And then we broke out, went sideways. But the Dow, unlike the other symbols, actually had a nice bearish rejection at this monthly and weekly. So really nice. And again, just understanding, what's going on. But if this is too big for you in the risk, I totally understand. So let's go down to the scalp chart, 1 to 5 minute. This is what you saw on the scalping chart. Where is 8 o'clock? All right. So when we came in, we had the same, again, no edge price action right here. Choppy, nonsense, box that area. And then finally, you got the break and retest. But again, as I mentioned, unless you're a seasoned trader, no trading the open. I always tell our newer traders, wait about 30 minutes till about 10 a.m. Let some of the volatility subside. And a lot of times the market shows its self. And again, we don't trade into news and earnings. So for me, these were trades right here. So these were definitely trades right here. Structured stops. I have to be above the most recent candles, above key levels. We are. And the first target will be down here. And again, if it's not going to give you that 2 to 1, then it's a judgment call. I like taking trades that go 2 to 1, but that was definitely a potential trade. If we would have gotten the rejection right here, I would have been looking up, but we didn't. So definitely this was a nice trade right here. As soon as we broke right there, I like it, because this basically the buyers couldn't hold, and then we went back into a range. So remember, top third, bottom third, fake out breakouts. This is what we call fake out breakout. First target 2 to 1, or down to the middle and bottom. If we're at the middle, we're looking at the middle of top. Remember, just understand bullish, bearish ranges. And again, as soon as we came in, that was a really nice trade, and it gave you more than your 2 to 1. But beautiful trade right there. Just reading and understanding the levels and the price action. All right, let's go to the Russell. Again, rinse and repeat. Go to that weekly chart. Okay, I hope when you look at this chart right here, I hope that you're seeing the range that's been going on over the last 2 years. So what we do is we box the range right here. Top third, bottom third, again, equal highs, equal lows. And look at this. This is telling you that this has been in a range for almost 2 years. So on the weekly chart, we know the context is a range in the bigger time frame. And if you're somebody who trades, a position trader who trades months, years, you had beautiful trades. I mean, you had rejection trades, top third. You had fake out breakout trade right here, the most recent trades. So until price can break out of this, we know that top third, bottom third, fake out breakouts are the trades that we're looking for. And that's the difference. When you understand what a bullish market looks like, bearish or a range, you're way ahead of the game. Now, step number 2, let's go to the 30-minute. And this is why we look at the top. We look at the big time frames versus short term frames, because we know that right now we've got a bigger range in play, and we're basically playing inside that range. Squeeze up the chart, what's been going on. And again, we can play inside that range using the previous day's range, weekly, monthly, yearly high. And I can see right here, just on Thursday, you had a beautiful break and retest, and you had another one right here trading, if you were trading this 30-minute chart the last 2 days. Now, if we go down to our scalp chart, 1 to 5 minute, let's go look at that. Let's go put in 8 o'clock. Again, this is rinse and repeat. It's the same things. We came in, we saw this price action during our, between 7 and 8. It's the overnight traders had no edge. And then finally, when it broke out, up until, the US Open, they had some very nice trades. Now, when we came in right here, we had that news come out. and you can just tell it's news. So we wait for the volatility. This was your most recent high coming into the US Open. And then you had 1, 2, and whenever you have a horizontal line of 45-degree, and we have 2 or 3 rejections, high probability we're going the other way. So again, when I came in, I talked about the trades. So the trades that I would have been looking, when we were looking for, we broke above, I'd be looking for that continuation. If we got the rejection, I'm looking up and we got it. Or my other trade is if we had where we couldn't hold and we came back into the range, and I'm looking to fade. And that's how we set it up every day. We set all this up. Remember, these levels are here before we come in. So we know if we're bullish, bearish, or range. So if we're bullish, we know the setups we're looking for. If we're bearish below the previous day's range, we know what we're looking for. If we're inside the range, we know what we're looking for. Again, the more obvious the price action, that's what we want to trade. I don't want to trade choppy nonsense. All right, so that was the Russell. We ended the day bullish, and look at that. We stopped at the yearly and monthly. Are we surprised? No, not at all. All right, so now let's go look at a few other symbols. I also want to look at the VIX. So again, remember I talked about the VIX, long-term, short-term? So the VIX, if it's moving down, when it's obvious, that helps short-term bullish. And if it goes up like this, that's going to be helping us see short-term bearishness. So we can see between 9:30, there we go. So it helps us see what's going on during the day. So very important. All right, let's go look at a few other, because we're getting on the weekends. Let's go look at oil. Again, oil's another symbol that we like to trade. We like to trade. I can trade gold, currencies, maybe Apple, like I said. So again, first things I'm looking for on the weekly. What is the context? Well, looks like we're kind of in this range here. And it looks like, again, I'm going to put the areas where price paused, or, to look at the range right here. Let's put that in right here. So remember, bottom, middle, top. So we're at that bottom of the range, looking like we're trying to reject right here. So again, this is an area of interest. Let's go see at the 30-minute what's happening. So we've got those bigger range levels in 30-minute. What's been going on this last week? We've been moving lower left to upper right. Again, using this 30-minute, I'm going to look at the previous day's range. And if we break out above the previous day's range or below, I'm looking at the weekly, monthly, yearly levels as, potential targets. If we're inside the range, again, I want to see obvious, but here also make sure you use your trend lines. So right here, use your trend lines horizontally in 45 degrees. This trend line would have helped you from not really, shorting. Why? We're moving lower left, upper right. So ideally, as long as we're staying above this 10 and this trend line, I want to be looking for longs. Okay. So on this 30-minute, oil definitely gave you some really nice longs, and especially this day right here had the break and retest right there. Now, if we go down to the scalp chart, 1 to 5 minute. Now oil trades at 9 o'clock, so we'll just leave 9 o'clock right there. So when we came in, we knew we had a very bullish day on Thursday. And then coming in, this is what overnight traders saw. Now, as long as you understand the rules of engagement right here, we had multiple. So for a scalp trade, I definitely see that. If someone said they took that in the overnight, no problem. But coming in, what were the trades that we were looking for? So as soon as we got above here, this was definitely a trade that is the A trade. It's going with the power. Again, we went from an inside to an outside day. We had multiple rejections here. So if you said, okay, I'm going to take a counter trend trade, but down to the previous day's high, I'd be okay with it. But this was really the A setup, going with the context of the market. Look, you're moving lower left to upper right. You still have that trend line in. We couldn't really get that follow through, and then we break back above. Now that's going with the power of the market. But if somebody told me they traded because it rejected the month or yearly with a target down to the previous day's high, I'm okay with it as long as you understand the risk. And again, as long as you have proven in your back testing strategy that you have consistency, you understand risk and money management, and you know the setups, whether we're above or below the range, or we know the range setups, I'm okay with it. And then as long as you have your journal, to look at, what's working, what's not, I'm okay with it. As long as you've proven with an edge, I'm okay. Let's go look at bonds. Same thing. I don't care what asset class, it's the same. Go to the weekly. What is the main context? We're definitely more bearish, lower left to, lower, higher, lower highs, lower lows, upper left to lower left, to lower right, sorry. And then here are the areas where price is paused in the monthly and weekly. Those are our major decision points. Go to step number 2, the 30-minute chart. I want to see what's going on over the last few weeks. And you can see we've been moving lower left, upper right. And we, again, is it a wonder when we hit those monthly, weekly levels that we pause? I mean, you can see right here, we have these key levels. It's no surprise. So over the last week, we've been more bearish. Again, using the previous day's range to help us with our trades. And then going down to step number 3, our scalp chart to see. And you can see, let's see right here, if the bonds is something you trade. Now, bonds, currencies, they all open at 820. All right, so you can see the volatility. Now, again, if you're a seasoned trader, again, you understood, are we above the previous day's range? No. Are we below right here? No, we're not. We're right in the middle. All right, so here's the rules about the middle. Again, above or below the previous day's range, I'm looking for clear momentum into pullbacks. Those momentum and pullbacks in a bullish bearish range using the previous day's high low is what helps us give us edge to find those. All right. If we're in a range, I'm looking for top third, bottom third that are obvious with fake out breakouts. But again, here's the rule about the middle. Number 1, you have to have back tested and proven the strategy that trading the middle has an edge. That's number 1. Number 2, the range, make sure you're writing this down. The range should be wide enough where from the middle to the top or bottom, you have at least a 2-to-1 target space. The middle, I'm typically going to go half size because it's more unpredictable. And I need to have break and retest that is so obvious, like this one. And someone said to me, I rejected this area, and they understand and it fits their risk profile and they understand the targets and all that stuff, then I'm okay with it. But if you haven't done the steps that I want, then do not trade it. All right, so bonds definitely had a nice rejection right there, and then it basically was no edge for the rest of the day. All right, let's go look at Bitcoin. Again, I'm just going through, so I'm showing you this. Again, let's go to the weekly. I don't care what asset class it is. It doesn't matter. So Bitcoin, we know we're moving lower left to upper right. Okay, we know that we're definitely bullish. Okay, I hope you agree with that in the main trend. Where are the areas where price paused and left quickly? Right here. Well, right here, left, and right here and here. These are what I call decision points for the month and weekly. And when price gets there, I want to see how it reacts. All right, step number 2, go to that 30, 60 minute. Again, what has price been doing? It's been moving lower left to upper right. Zoom in, what's going on over the last week. I hope you said that after Monday and Tuesday, we broke out. Wednesday, Thursday, and Friday basically have been bullish. So it gave you a beautiful, after you broke out of this, beautiful, and look at that beautiful, again, is if you trade Bitcoin short term, look at that beautiful break and retest, staying above the previous day's highs. Beautiful, really as good as it gets. Really nice. Okay, let's go look at, I'm going to look at, where's 60, let me just look at the euro and gold. So again, it doesn't matter to me. Go to the weekly. Okay, what is the euro telling us? Well, for me, it looks like we're in a range. In a one big range here on that weekly. There we go. So we've got this bigger range. It's a tight range actually for a weekly. And again, until we break out of this top third, bottom third fake out breakouts, if you were trading the weekly chart, step number 2, go to the 30-minute. We see the bigger range. And now what's going on in the 30-minute? Well, we've been bearish, lower left to upper right, but we also know that we're near the bottom of a bigger range. So that's important. What's been going on this week? We kind of held it. Okay, we kind of held it right here. I'm going to put this here. And now we're moving lower left to upper right. Lower left to upper right. And we can see right here at the monthly and yearly. So I said, you got to watch these key levels. I'm always about these levels. And again, right here, beautiful. Could have traded right off of this rejection right here. You had a beautiful trade right here. Beautiful. Right there, rejection of the previous day's range low. And then coming in yesterday, we basically had a range day. So ranges, we look at bottom, top third, bottom third, fake out breakouts. And if I'm going to trade the middle, I'll do it in a scalp chart. But again, if I haven't proven the strategy in my back testing and I don't have 2-to-1 to the top and bottom, I'm really not interested. But again, currencies trade from, where is 820? All right, there we go. All right, I'm just going to do 1 or 2 more because this has been going long. But again, on the weekends especially, I want to really show you guys not just the market breakdown, but this process. So again, rinse and repeat right here. Again, we know the weekly was in a range. We know what was going on in the 30-minute. Now we bring it down to the scalp chart. We can see the overnight traders right here. If the middle was something they want to trade and there's space to 2-to-1 at bottom, there were multiple trades right here to take. And then really the euro for me was not tradable. I'm not trading this. Okay. If you're trading this, then you got to ask yourself why. I have no interest in trading, chop. All right. Let's go look at gold. Again, rinse and repeat. Go to the weekly. What's been going on with gold in the weekly chart? All right. I hope you're seeing what I'm seeing and saying to me, you know what? I'm seeing that gold has been in a range since, 2021, equal highs, equal lows. Just put in the range, equal highs, equal lows. And again, if you were trading the weekly chart, look at the setups that it gave you. I mean, you had rejections. You had multiple rejections over the years right here. So I don't want to trade the middle of a range on the weekly. I'm going to be looking top third, bottom third, fake out breakouts until price can break out. Again, you don't have to listen to people on CNBC and YouTube. Learn the facts. Okay, 30-minute, what's going on? Well, we know there's a bigger range until we break out. But what's been going on the 30 here, intermediary trend, we've kind of been just going sideways for the last few weeks or months. All right. So now this week, what's going on? Well, it looks like every time we have these key levels, weekly, monthly, yearlies. So I'm just going to put lines there because we don't seem to be able to get above it. So we're basically in a range. We're in this range for the whole week right here. Okay. So let's go down to the scalping chart. Let's see if we had what we had. All right. So gold 820 is the start. So when we came in, definitely not, again, the only problem, I mean, listen, this it's a nice, this one, it's just too big. I don't trade candles this big. Because it puts my risk out of whack. So the nice trade right here was, again, if you prove in the middle, remember, top, middle, bottom, your job is, are we above the range or below it? No, we're not. So if we're not above or below the range, what are we looking for? Top thirds, bottom third, fake out breakouts. Remember what I talked about the middle. If it's a wide range, don't trade narrow ranges, okay? If it's a wide range like this one is, look what you got. This is a nice setup. If I'm going to trade the middle, Again, my stop is going to be above this recent candle and this level. I'm looking at 2 to 1 or down to the bottom. This gave you a little over 2 to 1, but this gave you out of whack reach, waited, relaxed. I got the break and retest at a key level, and I had space of 2 to 1. I got a very nice break and retest that was obvious. That would be a trade in the middle that I would look for, or if we were, like I said, if we were going the other way and we have that, those are the trades on the middle I'll consider. And that trade was a beauty. But if you don't know, again, the difference between bullish, bearish, momentum trades and range trades, and what are the A setups versus B and C setups, then you're never going to be consistent. And just waiting right here and saying, nah, you know what, that's too volatile. Let me wait. And then you got that. That was a beautiful trade. All right, let's go see if there's any stocks that look smooth. All right. Here's the semiconductor. I happen to like this one a lot because semiconductor is a big part of our growth and what's going on. So again, SOXL is a symbol that I like to trade, or you can trade the SMH. But again, my job is step number one, go to the weekly. I don't care. Okay, where are the areas where price paused? Would you agree we're moving lower left to upper right? Excellent. Now, where are the areas left and most recent where price has basically paused and left quickly? Well, looking left here and here, and here. These are going to be decision points that come from the monthly and weekly, and this is step number one. Step number two, always the same. I go to the 30-minute chart. What's been going on? We've been moving lower left to upper right. Zoom in. What's been going on over the last week? We're moving lower left to upper right. Okay, this is why I always have a 30, 60-minute on, so I never get lost in the forest. Go down to my, 1 or 3 minute chart. Again, this is a stock, so there is no, well, there is a pre-market if I do extend it, but I don't. So basically, this is what we were looking at. So the day before, we had this range, and then we had a break and retest. And there we go. For me, this was a beautiful setup, or you could have, those were my two setups that I would have taken right here. And what I would do is we put in a high here. So that would have been target one, and then target two, the yearly, again, those yearly monthlies and those weekly, yearly monthlies are critical once we get above the previous day's high or low, or you clear. So again, remember, you came in right here. You came in right here. We started inside, we broke, and what you were looking for was this. If you would have gotten this major rejection, I would have been shorting. If I would have gotten this break and retest with strength, I would have been looking to fade, but that's not what we got. We got beautiful. There we go. Beautiful trade, because you identified that we moved to a bullish momentum and we're looking for those bullish momentum and pauses. We had clear targets. First, we had this. Then when this was formed, that created this target and that target. All right. So that was XLL. Let me see if what else was pretty smooth. All right. Here's NVIDIA. All right, and then we'll call it quits. So I've done pretty much a really nice array. So again, step number one, we go to the weekly. Where has price basically paused? Well, it went from, we know, lower left, upper right. It went into this momentum, into larger pause, and then we broke out. So we know right here. Now I'll put a line here because this is now the new high. Step number two, we go to the 30, 60 minute. And what's been going on over the last week, even since February? I mean, listen, again, are we bullish, bearish, or range? You need to be able to identify that. And when you understand that we're bullish, bearish, and a range, it puts you ahead of 99% of the traders. So on the 30-minute, using our tools, this helps us identify trades, in this time frame. And then, of course, if you're going to go to step number three and use your, 1 to 5 minute scalp chart, then you came in. And the beautiful things about these levels are these are here before the market starts. So here it is. We opened up, and look what happened here. So This was Thursday. I have a trend line in before the day even starts. And again, here's your previous day's high, low, midpoint, and open right here. And here was your previous day's close. So you knew we gapped up. It was bullish. Okay. But I'm not going to trade here because there's not enough space. I'm going to wait patiently until we get that break and retest. So for me, these were two areas to take this trade right here. And then we kind of set in this area here. And then we had targets. Beautiful. I mean, this is, and then once you can put in, clear horizontal or 45-degree trend lines, use them again. So just understanding the again, our process again. So let's finalize this. And again, if you have any questions, you hit us up at hello@trade90x.com. My goal is every morning, every weekend, is to show you how we break down the market, and then I actually give you the strategy, our one chart view, that you can look at multiple symbols. Okay. And on the weekend, I showed you a quick way to really quickly to understand what the context is, what the sectors are doing, and then how to find stocks quickly going with the strength of the market. But again, let's go back to the ES and let's go back and recap. So first thing I always did, I always look at the news and earnings. Again, I don't want to trade into them. Hopefully the news and earnings will move price to an A setup within a bullish bearish range. Fear and greed index right here. Again, more bullish. Stock momentum based on the 50-day moving average was starting to move back up. Again, the sectors are more bullish than bearish. The long-term trend is still favors the bulls. And then again, we looked at the long-term versus short-term. We're moving lower left to upper right long-term. Short-term, and the symbols that we care about, we're moving lower left to upper right. So we are more bullish. Then in the chart, I showed you the top-down approach, looking the main trend, monthly and yearly charts. The intermediary trends are going to be our 15-minute up to weekly. And we literally go from chart to chart, or you basically used going the one chart view, and I'll do it one more time so you guys understand. First step, always go to the weekly. Step number one, so we're clear, is identifying, are we bullish, bearish range, main context? We are bullish. Second step that we do in this is, where is price most recently paused and moved away? Here and here. Step number two, go to the 30 or 60-minute. And what I'm trying to accomplish here is what's going on over the last few weeks. And last week, we're lower left, upper right. The last week has now also went from consolidation, and we're still moving lower left to upper right. Okay. Then right here, we can use, if we're trading the 30-minute, we use our tools. Again, are we above or below the previous day's range? Are we inside? Understanding that puts you ahead of 99% of the traders. If we're above, we're bullish. If we're below, we're bearish. Inside, we're in a range. And we know the A setups within bullish, bearish momentum or a range. And again, if we break above or below the previous day's range, we're always looking for those weekly, monthly, yearly, and those red line decision points. We clear, good. Step number three, if you're going to be someone who scalps and day trades, you come in right here and we use our levels. Our levels are the previous day's high, low again, like the 30-minute, midpoint, previous day's close, open. Again, if we're breaking above, we're looking for that bullish momentum. If we're looking below, we're looking ideally for bearish momentum. Or what we're looking for is the ranges. Do we get top third, bottom third? Do we get a fake out breakout? And like I said, the B trade for me is going to be the middle, but I showed you middle trades and I gave you the requirements. And again, on the ES on Friday, overnight traders went from an inside day to an outside day. They had multiple rejections here. And then again, into the news at 8:30, we formed this high. And again, we were above the previous day's high. So again, we talked about the setups that I was looking for. My favorite two setups were going to be the one that happened right here. Rejection at the previous day high to continue on back to 0.1 or 2 targets. Or if we broke back below, then I'm looking for a personality change from bullish into a range. Okay. So if there's anything you didn't understand about how we broke down the data that gives us an edge, bullish, bearish, or range, how we look at the overall context of the market from main trend to intermediate trend, and then how we use the one chart view with the tools, steps, and the actual tools, the setups, and the actual steps, then hit us up at hello@trade90x.com. Everyone enjoy the rest of your Saturday. Enjoy Super Bowl Sunday. And then we'll be back at it on Monday. And again, listen, don't be shy. Hit us up at hello@trade90x.com. And now, like I said, enjoy the rest of the weekend.